Good morning, Jax. This is Fahad. Today is Thursday, February 11th. Let's get started. Hey, congratulations, Jay, for yet another beautiful winner that's in front of us, which is Polypid, symbol PYPD. I woke up this morning with 6 emails in my inbox and 4 text messages from clients asking me that the position is up anywhere between 40 to 60%, what to do, start taking profits. For those who do not know, um, right over here in the this was the weekend research in late January in which Jay presented this fantastic, beautiful case on this company, which is off the radar. It's a global clinical stage biopharmaceutical company. Big bull case was presented right here, and at that time the stock was, and this is exactly the kind of research that we come forward, because if you show this kind of a chart to any kind of technical analyst, they will just poo-poo all over this. They would not care for something like this at all. But back then, the stock was trading at $9.97. This was in late January, and that's what the stock looked like. And then immediately, it staged a rebound. Ended up closing at 1374 yesterday, and in pre-market, it looks like this thing is going to gap higher between $16 and $17 per share. So it's going to be up another 20% today. So on a total basis, this position is now up 60% roughly. Now, I know you updated, Jay, in webinar yesterday that the key catalyst that we have in mind is still not expected until late this year, 2021. But do you have any quick thoughts on this one? Because I'm sure Jack clients have a lot of thoughts as to what should we do with the position, take profits. Any quick thoughts?
No, the news, not really the news. I saw the move yesterday. Didn't see any specific news. And then, after the close, came back to my desk and saw the stock was up. It was up on rather light volume. But again, I didn't see any specific news out there. So, I mean, the catalysts are still in play, and they did report earnings. I shouldn't say that there was no event. They did report earnings. Everything was, is going as planned. Like I said, the catalysts are still out there, but you do have to wait a little bit of time for those to work out.
Yeah, and for that reason, that's why I don't. If this was a catalyst coming up rather quickly, then I would wait. But this catalyst is not expected until much later. I'm reading quote here from the CEO in the earnings press release yesterday, in which they said, "We continue to anticipate top-line result from Shield 1 by year-end 2021. Moreover, our second phase 3 trial in abdominal surgery, Shield 2, which was recently initiated, is advancing as anticipated." End quote. So, there's not much happening over here in short term. There's no catalyst in play essentially. So for that reason, and I think this could be WSB crowd running some of these small cap biotechs. With the position up 60%, I would take profits and step aside and wait for a pullback to get back in. You have plenty of opportunity or plenty of time between now and the actual data comes out to position potentially yet again. So congratulations on that. Well done.
Mm-hmm.
All right. I have a quick high level view on Micron once again. Now, I'm going to quickly refresh everyone's memory over here, because back over here when the stock was trading at $50 to $55 per share, as many of the JAG clients listening to this that were in webinars week after week after week, multiple times I mentioned that you're going to see DRAM and NAND prices bottom in the month of November, and that will be the turning moment for this stock, because we are seeing that based on the contract prices, on the street, which was being reported by Digitimes and others, but the street was not paying attention to that. That's precisely what happened. We had recommended owning call options in Micron at the time, and you can see precisely when this stock started to turn around. This was from the beginning of November, and it staged a beautiful rally, rising rapidly over just a 3-month period from $50 breakout level all the way to 85. Now, for the past month or so, this has been consolidating. I had mentioned previously that this stock is going to go to $90 per share when it was trading at 50. and $90 was my expectation based on how the forward earnings estimates should turn sometime by 2021. I now think it's going to cross $100 per share, maybe even as high as 110 or $120 per share sometime this year. So I'm actually now further increasing my potential, my total growth that I'm expected, not from the company fundamentally itself, but also technically. I believe the stock is going to see even more upside, potentially as much as another 50% upside from here, easily to cross $100, maybe go to 110 or 120. And the reason why I say that is because the street is finally getting behind the story. They're finally starting to recognize what they have been missing. Here's a quick quote that comes from Morgan Stanley research that came out just a couple days ago, in which they said that, watch this, take a look at this. A month ago, our checks were pointing us to a mixed view on commodity, NAND, a consensus that even as DRAM and other areas improved, NAND prices would fall by double digits in the first quarter on a like-for-like basis, with continued downside into second quarter. I mean, that was their base case scenario, Morgan Stanley. But each passing day has brought new checks showing movement in positive direction. First, that prices would fall by less, then that prices would barely be down, and more recently we have heard selective reports of contract prices going up, particularly with the smaller customers in areas such as client solid state drives. There is now what we would characterize as moderate anxiety from buyers about the ability to procure parts. There you go. This is a key argument from Morgan Stanley, and it basically shows that the street is finally starting to get the story that I was explaining back in September, October, and November. So now I believe this stock is going well above $100 per share. Now, with all of this said, I do want to just put into this mix Western Digital, because I think that it's this too is, sorry, WDC, Western Digital. This too is going to be a beneficiary of the same trends too. There's an interesting argument to be made, because it also benefits from rising DRAM and NAND prices, that it's a very underappreciated stock despite this slight run in the stock. Now, first of all, if you look at the daily scale, you can see it has been gradually making a movement higher, but go all the way out to a 3-year or a 5-year chart, and you will see that compared to 3 years ago, how Western Digital is still such a depressed stock, trading at about half of its value than where it used to be, or 40% down, basically from where it used to be back in its best time of the year, which was 2017 and 2018 period. I think gradually it's going to march back towards $100 per share. It's trading at $60. I say this because this is where the re-rating potential comes into play, and it's going to be in place for quite some time to come throughout in 2021. This is another commentary that's coming out from Morgan Stanley, in which they said that, given that, I quote over here, given where Western Digital stock is trading at about 4 times prior peak fiscal year 2018 EPS, so 4 times only prior peak fiscal year 2018 EPS, we don't need to break new cyclical ground here. We just need there to be a cycle, and not even one that gets back to historical margin levels last seen in 2018. With recovery in NAND gross margins to the low 40s percentage from the current 20s percentage, a recovery in HDD gross margins to pre-COVID levels, we see the company getting back to $12 earnings per share run rate. I mean, think about this comment for a moment. $12 earnings per share run rate. What is the multiple that you want to apply on Western Digital? At 5 times, it gets you to a $60 price target, which is currently trading at right now. At 10 times that multiple, the stock goes to $120 per share. And you don't even need to break into a new cycle ground over here. You just need a prior cycle to gradually come back, and margins to gradually recover in high definition or HDD, which is already starting to happen. So This is another one to watch. I think both of these, Micron and WDC, have significant upside to come. That's it from me. Let's go to Jay.
Morning again. So I'm going to have two homepage write-ups coming out. Not sure of the order, but I'll definitely have one out later today. One of the potential write-ups is going to be on Trupanion, TRUP. Looks like shares are down slightly pre-market. This is after the company reported their Q4 earnings after the close yesterday. EPS came in at -9 cents versus a -3 cent estimate, so a miss there. But revenue was up, or revenue came in at 142 million versus 139 million, so a beat on that. Subscription revenue was up 23%. Stifel analyst Jonathan Block was out with a post-earnings note saying that Q4 gross additions were the one standout in their opinion. Gross additions of 47,000 were up 35% year over year and ahead of their 41,000 estimate. They go on to add that the 2-year stacked gross addition growth was plus 46%, and that was likely aided by increasing pet adoptions in the second half of 2020. Now looking ahead, to this year, Trupanion expects to ramp up spending on development efforts such as new products and international expansion. Management estimates an additional 2 to 5 million of spending will go toward various initiatives in 2021. Looking at partnerships, I took a glance at the earnings transcript. I didn't see anything regarding State Farm. But Stifel noted that for the Aflac partnership, this doesn't look to be a meaningful P&L contributor until 2023 at the earliest. But still very early on, and that's not to say that they can't generate other partnerships or announce other partnerships. But State Farm, Aflac, those are still out there. But I'm going to have a full write-up, a full behind the numbers write-up on Trupanion at some point, either later today or tomorrow.
Excellent stuff. So just so that I understand this correctly, they now expect 2 years before that partnership with Allstate is going to get into high gear?
Right, with Aflac.
With Aflac. What about I think the first one they started, was it Allstate or was it State Farm?
That was State Farm. Yeah, and like I said, I didn't see anything in the conference call when I searched for State Farm. I didn't see any mention of that. And I didn't see any commentary from Stifel, that just only on Aflac. And Jonathan Block believes that this isn't going to be a contributor until 2023 at the earliest.
It's been, excuse me, it's been what, 9 months now at least since that partnership was announced, and I still have not seen any traction in that one. It's taken them very, very long period of time, for such a significant announcement to start showing any kind of contribution or even conversations around this, in the earnings call and whatnot. And so, and now the Aflac partnership also has a 2-year time period. So this thing, they're doing the right things. They're doing these massive big partnerships, but it just seems to be taking far, far longer than what I had originally expected. Nevertheless, I do want to point out that in this time back in July, in webinar, we specifically recommended buying call options going into earnings. That worked out beautifully. Then once again in October, we specifically in webinar recommended buying call options here. That worked out beautifully. This was the only time in the last 3 quarters when I completely skipped it. Clients were asking about this. There were a bunch of questions about this all week long. Should we take a position? And I just took a total pass and I said, no, I'm not taking a position. So we dodged the bullet. The stock is slightly pulling back. And I think let it come in, let it settle down, give you a new levels to come back in, but still no interest over here. And I would really like to see some of these partnerships really get into the gear, because it's taking them too long than what I had originally thought.
Yeah. And then the second write-up that I'll have is on the food service equipment industry, and specifically taking a look at Middleby, ticker MIDD. Now, this stock hasn't done much this year, and that compares to another company, a similar company called Well-Built, WBT, that's also in the food service industry. But anyway, KeyBank was out with a note recently with channel checks. They highlighted that dealers reportedly steadily increased quoting activity and backlog as restaurant chains prepare to reinitiate new unit development in 2021. They heard from multiple contacts that March 1st is a date of focus, as it would allow time for new infrastructure to be put in place ahead of a fuller late spring, early summer reopening. So yeah, this is along the lines of a reopening theme, but yeah, recent channel checks from KeyBank, I will highlight those, and then there are also sort of sympathy read-throughs from the casual chains, the quick service chains that paint a much better picture for a company like Middleby.
Yeah, I can just tell you from my observations here, the governor of Michigan has now allowed restaurants to reopen with indoor dining capacity at 25%.
Yep.
New York announced the same about 2 weeks ago, I believe. Governor Cuomo over there. I mean, these are some of the strictest states in the nation, as we know. The blue states, Michigan, New York, California, and they all have started to actually reopen restaurants with limited capacity. And I think within the next month or so, they're going to increase that capacity limit to 50% and then 100%. So by the summertime, we're going to have 20-25% of the US population vaccinated. And I think the life can gradually return back to normal. And I think vacations will also come back sharply. So to tie all that discussion into reopening theme, Middleby should actually be seeing a pickup in the back end for new orders from these restaurants. So this is not surprising to me, but yes, very interesting to see that commentaries are starting to flow through in that direction. So looking forward to your article on this one as well. Keep a trigger at 142. If it breaks out through 142, then we could see this thing pop towards 160. All right, folks, we're going to stop over here. Chronicle is not with us today. He's off today and tomorrow. He will join us next week. That's it from us. We'll see you in the chat room shortly.